Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Tuesday, October 29th, 2013. Having traded above last week's high at 1754 during Sunday's Globex session, S&P futures sold off from Sunday's Globex high and pulled back down at or near 1751, 1752. The market held support during Monday's pullback and auctioned back up at or near Sunday's high, but was unable to extend the trading range during Monday's session. At Tuesday's open, the S&P pulled back modestly down to 1754, at which point the buying interest resumed, and the S&P auctioned back up above yesterday's high and went on to make a new higher high, trading up to 1767. During the rally that began when the S&P pulled back down and retested support at 1736, 1734, the Kalman filter has continued to ascend as the market has made a series of higher highs and higher lows. While trade activity during the day session has sometimes been lacking for extended periods, the general direction indicated by the trade disbursement continues to move higher as the S&P continues to extend the trading range. In the context of this week's auction, the maximum likelihood expectation target is located at 1775. For a more detailed look at the fractal lows and the likelihood of where the market will find support on its subsequent pullback, we can see that the S&P is now 32 points above its previous support level down at 1736. An average daily range in the S&P is approximately 17 points, which makes Monday's low a pullback target candidate. However, the trade activity at Monday's low, as well as the narrow range development that led to Monday's low proving to be support, is by our volume estimate a weak support level. Moving above support at 1736, the 1740 and the 1742 price level, between 27 and 24 points below the current high, are both formidable candidates, and if and when profit-taking begins to occur, both of these would be pullback targets that we would feel would likely sustain any downward profit-taking momentum. As we look at the probability range projection coming into Tuesday's session, the extreme price excursion target is now extended up to 1779. The next resistance level, as measured from today's median, is located up at or near 1771. As you can see, the extreme price excursion target on the downside is estimated to be down at 1745, with factual support down at the 1741 low. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.